I want to share with you today. Let's talk about the 3 questions I think every investor, everybody who's watching the financial markets, anybody who's employed or used to be employed before this pandemic wants to be paying attention to their money. We want to answer these 3 questions. Historically, what happens to the stock market after an election year, right? Number 2 would be, what changes should I be making, if any, when handling my money? And thirdly, what changes should I be making, if not only to my money, but afterwards, what are some things I should be planning as we go into the end of the year? So 3 really big things. So let's talk about historically what happens. This is something that you can expect. Obviously, it's not for sure. This is just based on history. This is what it tells us. History tells us, and we'll know more hopefully by this evening, that if a president incumbent is re-elected, so in this case, President Donald Trump is re-elected, LPL shared a report that said stocks on average will produce a 10% rate of return after the 1 year of the election. So over 70% of the time, historically, if the president is re-elected, the market will produce an average return of 10% 1 year post-election. That being said, if there's a change of political party, if in this case, if Vice President Joe Biden were to be elected, historically, then 50% of the time, the market would produce a return of 5% at a 1 year point after the election. Now, of course, this doesn't say that this is exactly what's going to happen. This is simply giving us a historical look back on the financial returns based on whether someone is re-elected or a new president is elected. So keep that with a grain of salt. It just kind of gives, it's kind of just financial trivia for you to keep mindful of. Now, as you know, there's actually 2 bigger things that you should be paying attention to. In one thing is obviously much bigger, and that is the pandemic. Until we get behind, or I should say the pandemic gets behind us, we get ahead of the pandemic, we will continue to expect market volatility. We'll continue to see weakness in the financial markets, and of course, more eyeballs and interest on this stimulus deal. As we know, Congress has failed to reach another stimulus deal. Unfortunately, what that translates to, Americans are struggling through this second, third wave of the pandemic, and this is what we know so far. So Senate Majority Leader Mitch McConnell announced that the Senate would be recessed until November 9th. Which translates to 23 million plus Americans continue to be collecting unemployment benefits, and unfortunately a new daily record high of new COVID-19 cases across the United States. That number just seems to get worse, and unfortunately that is, believe it or not, more meaningful to the economy, the financial markets, and even the election. So those are the things, if you're an investor, those are the things you should be really paying attention to. The other thing that you want to be paying attention to, and this goes to our questions, is what you should be paying attention to not only from this election, but things that are going to be impacting you for the end of the year, and why we should expect more financial volatility, and also some of the things that you should be doing to prepare yourself. Okay, so December 31st is sort of a huge deal, okay, because the CARES Act, a lot of the benefits of the CARES Act, which was the first stimulus package, expired on December 31st. And these are the things, for example, the 401k COVID-19 hardship withdrawals and loans that are through the end of 2020 does expire. So you can actually currently, if you were to take a loan out of your 401k and you're under the age of 59 and a half, well, you're able to spread that tax payment out over a period of 3 years. The other thing is the enhanced unemployment benefits. This is really dire and unfortunate, but unfortunately, as you know, unemployment, that extra $600 a week expired quite some time ago. But for self-employed independent contractors, and some of you actually might be in this category, gig economy workers are actually eligible to continue to receive state benefits due December 31st. So based on this, millions of workers will lose their benefits next year. Also, don't forget, for those who are on unemployment, right now you're actually getting 39 weeks of benefit versus the traditional 26 weeks offered by most states because of the pandemic. Those extended benefits end on or before December 31st, again, depending on when you started collecting unemployment. Lots of news, right? The eviction ban, the CDC historic order prevented residential evictions until the end of the year for most tenants as well. Mortgage relief, similar story, end of the year. And student loan forbearance. Student loans, federal student loan payments remain on auto deferment until January of 2021, unless private. Now the same goes for like credit cards and auto loans. If you have those and you need to defer payments, you definitely want to reach out to those lenders directly and see if you can get some sort of benefit in that way. But what do you do? What should you be doing, and what are we telling our clients to do right now given the election results? So obviously I'm hoping you're going to be watching to see how those numbers pan out this evening. I'm guessing you will. But more importantly, you're probably wondering what you should be doing on the days ahead. Well, let me tell you what we are doing here at our company, and maybe this will give you something to think about. What we've been doing throughout this pandemic and even before this pandemic is to be very mindful of gains. So we were really making sure that we were doing profit taking throughout this process, making sure that portfolios were well balanced, but also having a list of sort of our wish list of long-term securities and investments and mutual funds and ETFs that we felt that were meaningful for our clients, that made sense for their individual portfolios, right? And that's really what you should be doing too. There might be opportunities this week for you to add to your portfolios if there's a couple different, and there's a big if, all right? There's a lot of things you want to be paying attention to. First off, you want to make sure that you have no debt. That's key. You don't want to run investing if you have debt. If you have no debt and you have savings, you have your emergency set aside, and this is a big thing, and you can handle the risk tolerance of being and staying invested for the long haul. We're talking more than 5 years. If those things all bear true and those things are appropriate to you, then you can actually take a look and see if there's opportunities for you to add to your portfolios for the long term. In fact, I want to share an article that came out just today from my friend Lori Cornish, reporter at CNBC. It's titled "Worried About Money? These 4 moves can help you regain your financial footing." So if you're not really sure what to do, this is an article. If you're going to read anything today, this might be the one that you want to take a look at. This is sort of, I like this because it's not just about the stock market, but it's about personal finance and what are some things that we can do that are really meaningful to make a difference on our own financial lives and that of our families, right? So this is one that I actually contributed to. So take a look at it, take a look at this article. Let me know what you think. And of course, this touches upon the political environment that we're currently in. It talks about the election. Obviously, it touches on things like the stimulus, which is so important. So this week, let me tell you, we're going to keep following the financial markets very, very closely. Let's see what happens tomorrow. I'm actually thinking tomorrow, for those of you who are investors, this could be an opportunity for you to add to positions. You may not want to do it on the first day. You might want to take a look at what happens as we go through this week. But again, if you are an investor, if those things that I talked about earlier make sense for you, and ideally if you're working with a financial advisor, a financial advisor team that is very experienced not only in current markets, but working during very difficult times in the market, financial downturns as well, they put together a plan. This is what we're actually actively doing with our clients. Also, I should note, if you would like a second opinion, you're looking for a complimentary consultation, definitely reach out, check out the website sungroupwp.com. You can jump in and request your complimentary consultation. We're doing a ton of those. And if you are an employer or you're at a company and you are looking for a speaker to come and talk to your employees or your group or your club about personal finance, about how they can make a difference in their own financial life, definitely reach out. We're doing a ton of speaking this year, and we would love to help you with that. So we're doing a lot of volunteer speaking. So reach out. We would love to help you. This is your chance, because typically I'm on a plane, I'm at some conference, and then you have to go into the area of speaking fees. Right now we're doing virtual speaking on a volunteer basis so that we can help as many people as possible. So we love to hear from you, all right? So thank you so much for tuning in. I hope this information was helpful. Do me a favor, if it was, make a comment. Let me know what other information you would like to learn about personal finance, and submit those financial questions that you have all through the week. You don't have to hesitate. Just send those questions in. As you know, every single week we do AWA, which stands for Ask Winnie Anything. That's where we answer your financial questions right on the show. So have a great day. Keep safe, and definitely tune in and see what happens with the election, and we'll have more to discuss tomorrow. So thank you so much, and I'll see you very soon. Take care now.